Hello everyone and welcome to another midweek technical outlook here at xm.com. Markets remain unsettled as the Middle East ceasefire prospects take center stage, keeping investors trading cautiously. Today we will be looking at the US 500 index, which is extending its slide beneath the 200-day SMA, oil, which is rising for the second consecutive session, and Bitcoin, which stabilizes near the 70,000 threshold, trading in line with the broader risk sentiment. Now let's start with the US 500 index, which is extending the trading below the key 200-day SMA and a 2-day pullback from the long-term ascending trend line drawn from May lows. Should it resume to the downside, then immediate support might come from the 6,500 level, which intermittently capped losses since early September. However, this level was reached early this week on Monday and reached the 7-month low near the 6,430 level, so any downside could be halted by this level. Now, to the upside, immediate resistance lies at the multi-month lows near the key 200-day SMA, near 6,640. However, this key 200-day SMA has turned into a strong resistance in the past few sessions, but should manage to break above, then the next resistance level might come at the 20-day SMA near the 6,700 level. Now, the momentum signals reflect the negative bias for now. Price action is below the long-term ascending trend lines. The MACD is overextended to the downside below zero and the red signal line, and the RSI is flatlining below the 50 neutral threshold and heading toward oversold. Now let's also have a look at oil. Oil is extending a 2-day rebound from the range floor of this consolidation that has been taking place since early this month. It's heading above the key 90 level and toward resistance near the 95 level. Should manage to break above, then immediate resistance might come from the 100 psychological figure, followed by the 104.36 level, which is the 23.6% extension of Fibonacci extension of the up leg from the December to March peak. Now, to the downside, immediate support might come from the 90 level, followed by the range floor near the 87.34. This would also mean that it would break below the short-term ascending trend lines and turn the outlook back to more neutral one, heading towards support near the 79.73 level. Now, the momentum signals reflect the consolidation and the fading of the strong bullish conviction, with the stochastics stabilizing above the oversold threshold, the RSI ticking higher above neutral, and the MACD above the zero line, but retreating below the red signal line. Now let's also have a look at Bitcoin. Bitcoin is holding within this multi-month ascending trend channel. It is currently weakening near the 20-day SMA, struggling to hold the key 70,000 threshold. Should the decline resume, then immediate support might come from the 50-day SMA currently in a bullish crossover with the 20-day SMA near the 68,931 level, which is also the 23.6% Fibonacci level of the January to February pullback. Now, below that, support might come from the 65,400 level, which houses the monthly lows. And it would also mean a breakout from this channel and intensify downside risks. However, for now, it is keeping within the mid-range still of the channel. So should it manage to rebound from the 20-day SMA and break above the key 71,500 level, then immediate resistance might come from the 74,471 level, followed by the channel upper boundary near the 77,000 level. Now, for sustained upside for Bitcoin, which is still hovering over 40% from its all-time peak, needs we need to see a firm break above the 78,000 and the 80,000 levels. The momentum indicators are reflecting this consolidation phase for Bitcoin, with the RSI stabilizing near the 50 neutral threshold and the MACD trading marginally at the 0 and the red signal line, reflecting this muted momentum for now. Now that's all for today's market wrap. Thank you for watching.